DMart reports numbers tomorrow. They've already given a Q2 update where they're guiding for a standalone revenue growth of about 18.5% on a year-on-year basis and about 6.2% on a quarter-on-quarter basis. And the stock has done pretty well since its Q2 update. It's rallied close to about 8%. But, the proof is in the pudding, and we'll know that tomorrow. But let's talk about banks. Banks are seeing this solid intraday recovery. That said, on a week-to-date basis, weekly basis, banks are still underperforming. Abhishek is joining in for an overall roundup of what's been the trend, the driving factors. Abhishek.
Well, Nifty Bank has underperformed, overall Nifty. So Nifty Bank has declined on a weekly basis, while Nifty has actually gained or seen upward of 0.5% on a weekly basis. Now, analysts have turned cautious. Analysts are becoming cautious with respect to banking sector, particularly regarding the net interest margins and the return ratios, that is ROA and ROE, going ahead. So this cautious may be related to the challenges and uncertainties that they are seeing in this sector. So for instance, UBS Securities has raised certain concerns. They have expressed concerns on the credit cost in FY25 for banks, especially coming in from the unsecured retail portfolio. They suggest that, increasing default risk in retail unsecured lending could lead to higher credit losses or higher credit costs for the banking sector, potentially ranging anywhere between 50 basis point to 200 basis point. So they say that the unsecured retail loan growth is at a CAGR or cumulative annualized growth rate of about 27% between FY18 to FY23 and accounts for 8 to 12% of banks under coverage. That is 8 to 12% of the overall banks that are under their coverage as of Q1 FY24. They believe that the risk of default is rising as the share of lending to already overdue borrowers has increased substantially from being at 12% in FY19 to right now about 23% as of FY23. So UBS recommendations, if you take a look, they have downgraded their rating on State Bank of India from buy to sell, and they have also lowered the target price on SBI to about 530 from the earlier target price of 740. They have also downgraded Axis Bank from buy to neutral, and they have reduced the target price to about 1100 per share from the earlier target price of 1150. In another news, you have Bank of Baroda, which has been under major underperformer this week. It has declined by 5% this week. So that is back on certain news that attributed to RBI's decision to barring new customers from being onboarded on the digital platform, that is the Bob World, which has put pressure on the bank stock price as well. So RBI's action on digital platform of banks, if you take a look, they have taken regulatory action against banks' digital platforms over the last few years. So this is the second instance of a bank, being under RBI's radar after RBI had actually banned onboarding of new customers for SDFC Bank. So SDFC Bank actually took 15 months to receive approval from RBI to onboard new customers on their digital platform. In another news, Paytm's regulatory issue actually has increased. So Paytm Payment Bank has faced regulatory issues with RBI imposing a fine of about 5.5 crore, that is rupees 5.39 crore on the bank due to deficiencies that they have seen in the regulatory compliance. However, Paytm's stock price has seen positive performance so far, rising by about 1.3% on a weekly basis, about 9.5% on a month-on-month basis, and year to date, or YOY basis, perhaps they are up 77%. Back to you.
Okay, got that. Thank you very much, Abhishek, for some of those details there. Lots of interesting data points there on financials and banks as well. Well, we have